Stop looking at the stock market ticker. Stop obsessing over the political theater in Washington. Stop watching the aircraft carriers moving into the Gulf of Oman. Those are distractions. They are noise designed to keep you blind. Look at the price of silver paste. In the last 48 hours, the cost of this industrial blood has surged by more than 25%. This is not a trading signal. This is a coroner's report for the old economy. The energy transition is not a policy debate. It is a physical war for resources, and the first casualty is the illusion of abundance. While you were watching the news, the solar industry just began to cannibalize the world's silver supply. This is the solar black hole. The media tells you that silver is a precious metal. They treat it like a pet rock or a speculative token. They are lying to you. Silver is not a luxury. Silver is a strategic military and energy component. Without silver, there are no Tomahawk missiles. Without silver, there are no electric vehicles. And most importantly, without silver, there is no solar energy. In the data stream from this week, we witnessed a kinetic fracture in the supply chain that nobody is talking about. The manufacturers of next-generation solar panels are in a state of absolute panic. I am not using that word lightly. I am using it forensically. The specific technologies known as TOPCon and heterojunction are the new standard. They are more efficient, they are more powerful, and they are gluttonous. These technologies require significantly more silver paste per unit than the old PERC panels. The industry knew this was coming. They thought they could engineer their way out of it. Thrifting. They failed. Physics does not negotiate. Silver remains the most conductive element in the periodic table. You cannot cheat physics with paper money. But the 25% spike in paste costs is just the surface wound. The internal hemorrhaging is far more severe. The solar industry is now consuming silver at a rate that mathematically guarantees a depletion event. We are moving from a surplus economy to a deficit economy. For decades, the price of silver was determined by paper contracts traded in New York and London. Bankers who never touched a bar of metal in their lives would sell promises of silver they did not have. That era is over. The solar manufacturers do not want paper promises. They need physical atoms to conduct electricity. When a factory in China needs silver to keep the production line running, they do not care if the spot price is $20 or $100. They will pay it. This is what economists call price inelasticity. It means the demand does not drop when the price rises. In fact, it might even increase because of the fear of total unavailability. Apple will pay $200 an ounce. Tesla will pay $300 an ounce. They can pass the cost to the consumer. You cannot. If you are waiting for a pullback to buy insurance, you are going to be left holding empty fiat currency while the industry vacuums up every available ounce. You might be asking why the mines do not simply produce more. This is the second part of the trap. At the exact moment, demand is going vertical. Supply is facing a kinetic decapitation. Look at the reports from Mexico this week. The kidnapping of 10 technical specialists at the Panuco mine in Sinaloa is not a random crime. It is a structural breakage. Mexico provides nearly a quarter of the world's silver. When the cartels move from drug trafficking to resource extortion, they add a kinetic tax to every ounce that comes out of the ground. Operations are suspended. Expansion plans are frozen. The geology was already difficult. Now the geography is hostile. You have a starving solar industry screaming for metal on one side and a paralyzed mining sector on the other. This is not a market equilibrium. This is a violent collision. But the real horror story is not in the mines, it is in the vaults. If you look at the COMEX registered inventory levels reported in the latest data, you will see a skeleton. The registered category, which represents metal that is actually available for delivery against futures contracts, has collapsed to approximately 123 million ounces. That sounds like a lot until you do the math. The global solar industry alone consumes hundreds of millions of ounces a year. The buffer is gone. We are operating without a safety net. The ratio of paper claims to physical ounces is astronomical. When the solar companies realize that the metal they need is physically not there, they will bypass the futures market entirely. They will go directly to the refineries and the vaults. They will secure off-market deals. This will drain the remaining liquidity from the public markets instantly. The price you see on your screen will become irrelevant because there will be no metal available at that price. The spread between the paper price and the physical price will widen until the paper market breaks. This is a mechanism of wealth transfer. It transfers wealth from those who hold paper assets to those who hold physical reality. The banks have suppressed the price for years, unwittingly subsidizing the green energy revolution. They made silver cheap for Elon Musk and the Chinese solar giants. Now the bill is due. The vaults are being swept clean. The leverage is unwinding. We are witnessing the failure of the just-in-time delivery model applied to a finite resource. The black hole of solar demand is relentless. It does not sleep. It does not care about interest rates. It only cares about conductivity. Every solar panel installed on a roof is a graveyard for silver. That silver is taken out of circulation for 20 years. It is not coming back to the market. It is gone. We are burying our monetary metal in glass and silicon, never to be seen again. And do not think for a second that recycling will save you. The cost and complexity of recovering silver from degraded solar panels are currently prohibitive. By the time recycling becomes viable, the price will be in the stratosphere. We are burning the furniture to heat the house. The desperation of the industrial sector is palpable in the supply chain updates. They are scrambling to secure long-term contracts. They are buying mining companies directly. They are front-running the inevitable shortage. Meanwhile, the average investor is still looking at historical charts, wondering if silver is a good investment. It is not an investment. It is an exit strategy from a burning building. The building is the fiat financial system, and the fire is the mathematically impossible debt load. Silver is the only door that leads to the physical world. The divergence we are seeing between the paper price and the physical reality is the final warning. When silver paste prices jump 25% in a heartbeat, it tells you that the industrial user is panicking. They smell the shortage. They know the mines in Mexico are offline. They know the grades are falling. They know the vaults in London and New York are bleeding. They are acting now. They are securing their survival. Are you securing yours? Or are you trusting a digital number on a screen to protect your labor and your time? The system is designed to keep you calm while the insiders strip the assets. They want you to believe that everything is under control. But the data from the photovoltaic sector screams that control has been lost. The invisible hand of the market has been replaced by the iron fist of necessity. Let us look deeper into the technology itself. The shift to TOPCon and heterojunction is not a fad. It is a requirement to meet the energy density goals set by governments worldwide. These cells use silver fingers on both sides of the wafer. They use low-temperature pastes that require higher silver loadings. There is no thrifting this away. Scientists have tried to replace silver with copper for decades. It fails. Copper oxidizes. Copper does not have the same reliability over a 25-year lifespan. In a world facing an energy crisis, reliability is everything. You cannot install a solar farm that fails in 5 years because you cheaped out on the conductor. So silver is locked in. It is the non-negotiable DNA of the modern energy grid. This means the floor for silver demand is rising every single day, regardless of the economic cycle. Even in a recession, the build-out of the grid continues. The demand is structurally embedded in our civilization's survival plan. This creates a pincer movement on the price. On one flank, you have the monetary demand from citizens losing faith in their currency. On the other flank, you have the industrial demand from corporations fighting for energy dominance. Both are chasing the same shrinking pool of above-ground stockpiles. The result will not be a slow, steady rise. It will be a vertical repricing, a super spike. It will happen overnight. You will wake up, and the metal will simply be unobtainable. The dealers will be sold out. The premiums will be 100%. The paper market will be suspended for force majeure. This has happened before in history, and the conditions for it to happen again are perfect. The trigger is already pulled. The bullet is in the air. The 25% jump in paste cost was the sound of the gunshot. Did you hear it? Or were you listening to the lullabies of the central bankers? The narrative of digital gold is failing in real time. We saw Bitcoin crash while gold and silver soared. Why? Because in a kinetic world, you cannot transmit value without electricity. You cannot build a solar panel with a Bitcoin. You need atoms. The smart money realizes that the digital scarcity narrative relies on a functioning, peaceful, high-trust infrastructure. We do not live in that world anymore. We live in a world of fragmented supply chains, kinetic resource wars, and crumbling trust. In this world, the only scarcity that matters is physical scarcity. Silver is the most undervalued asset on the planet relative to its critical importance. It is the Achilles heel of the green agenda. Without it, the lights go out. Without it, the future is canceled. Do not underestimate the speed of this collapse. Industrial users act in herds. Once one major manufacturer starts hoarding paste, they all do. It creates a self-fulfilling prophecy of shortage. Inventory managers move from just in time to just in case. That shift alone can wipe out global supply for months. We are seeing the early signs of this hoarding behavior now. The rumors of JP Morgan's distress in the derivatives market are just the smoke. The fire is in the fabrication plants. The fire is in the empty space where the silver used to be. The leverage is breaking. The paper shorts are trapped in a burning room with no exit. When they try to cover, there is no one selling. Who would sell a strategic asset for dying currency? This is the end of the suppression era. The physics of the solar black hole are too strong. Gravity is taking over. The price must rise to a level that destroys demand. But as we established, demand cannot be destroyed without destroying the energy transition itself. So the price has no ceiling. It will go until the system breaks or until new monetary paradigms are established. You are standing at ground zero of a historic repricing event. The window to acquire physical insurance is closing. The industrial giants are stepping in front of you in the line. They have bigger wallets. They have government backing. They have existential motivation. You are a small fish in a tank with sharks that are starving. Do not let the quiet price action of the past decade fool you. That was the calm. We are now in the storm. The data is unequivocal. The consumption is real. The depletion is real. The geopolitical risk in mining jurisdictions is real. The only thing that is fake is the paper price, and that fake reality is dissolving before our eyes. When the dust settles, there will be two types of people: those who hold the physical keys to the future, and those who hold receipts for a past that no longer exists. The solar panels on the roofs of your neighbors are sucking the wealth out of the vaults and locking it away. Every sunrise powers the destruction of the silver surplus. It is a relentless mathematical certainty. Do not turn away. Do not close your eyes. The numbers have been laid bare. The paste cost is up 25%. The inventory is down 70%. The mines are under siege. The logic is flawless. The outcome is inevitable. The only variable left is your action. Are you a spectator to your own impoverishment? Or are you a participant in your own salvation? The time for research is over. The time for acquisition is ending. The time for regret is approaching. Do not be silent. Silence is consent to the theft of your future. I want you to perform a physical audit of your own life right now. Go to your safe. Go to your hiding spot. Count the ounces of physical silver you actually hold in your hands. Not an ETF, not a mining stock, not a promise, real metal. If that number is 0, write 0 in the comments below. Do not hide your vulnerability. Acknowledge it. Admit that you are a voluntary victim of the industrial machine. If you have prepared, write your number. Let the algorithm know that there are those who see the storm coming. Let the world see who is awake. The solar black hole is eating the world's silver. Make sure it does not eat you. Write your number now.